Hey there, you tech-savvy people. Today we're diving into something super important for all you business owners out there. The top 5 money mistakes small businesses make, in my opinion, and of course, how to avoid them. Let's not waste any time and let's jump right in. Hi, I'm Noel Lorenzana, your friendly neighborhood accountant. If you're new to my channel, welcome. If you're returning, welcome back. So the first money mistake that small businesses make is number 1, not having a budget. Imagine going on a road trip without a map. You might get lost, right? That's what happens to small businesses when they don't have a budget. No plan means no direction. Without a budget, small businesses can't plan where their money should go, and they might end up spending it on the wrong things. Now, think of a shopping trip without a list. You might end up buying a lot of stuff that you don't need. This is what happens when small businesses don't budget. Spending can get out of control. They might spend too much money on things they really don't need and run out of money for the important stuff. A budget helps keep everything in check, just like a shopping list. Without a budget, a small business might not save any money. Then if something unexpected happens, like a broken computer or something expensive, they might be in big trouble. A budget also helps put some money away in the event of surprises. Without a budget, a business might find it tricky to make big decisions because they don't know what they can and can't afford. Knowing what's available makes those choices a whole lot easier. I can tell you from my personal experience, private and public entities that manage money, like school districts, townhouse associations, whatever, they all have and work off of a budget. For them, it's required by the rules that they need to follow. So take note for your business, have a budget. Mistake number 2, mixing personal and business money. Mixing personal and business money can lead to serious confusion. Everything gets messed up. By not separating these funds, it becomes difficult to track what money is being used for the business and what's being used personally. This lack of clarity can lead to problems and potential mistakes. Taxes can also become complicated when personal and business funds are combined. This creates potential tax problems. It's critical to keep accurate records for tax purposes, and mixing personal and business money can create confusion, which can lead to errors. Maybe you're using your personal credit cards for your business expenses, but when you need to track those expenses for your business, you're probably going to miss some of those expenses. If you're still not convinced, imagine this. Let's say the IRS is auditing your business, and that's unfortunate, but it happens. So naturally, you're gonna have to show them your bank statements for your business. But later, when they find out that you've been using your personal accounts to pay your business expenses, they're gonna wanna see those personal bank statements as well. You've now opened up your personal finances and bank statements to the IRS when you didn't have to. Keep them separate and you can avoid all that. I won't get into the legal aspect of it because I'm not a lawyer, but there's a thing called piercing the corporate veil. And basically, if you're mixing personal and business finances and you have a separate business entity, you can invalidate your legal protections for that entity. By keeping personal and business money separate, a business can run better and more effectively. Mistake number 3 businesses often make is not saving money for taxes, and that's a big problem. Think of it like saving for something you really want to buy. If you don't save enough, you can't get it. If a business doesn't save enough for taxes, it can run out of money when the tax bill comes. This could lead to needing money in a hurry, which can cause other problems. Just like paying a late fee for a library book, not paying taxes on time might result in extra fees such as penalties and interest. It can also cause stress and worry for the business owner. So saving for taxes is a must. It helps a business have enough money when the tax bill comes due. It helps to avoid penalties and interest, reduces stress, and lots of other things. Mistake number 4, neglecting your bookkeeping. Neglecting your bookkeeping is like ignoring the chores you need to do around the house. Eventually things pile up and get real messy. When a business doesn't pay attention to its bookkeeping, it loses track of where its money is going and coming from. This can create a huge mess that's hard to clean up. Keeping accurate records of sales, expenses, and other financial details is essential for understanding how the business is doing. Without proper bookkeeping, it's tough to make smart decisions about spending, saving, or growing the business. Mistakes in bookkeeping can also lead to trouble with taxes, legal issues, or even running out of money. By staying on top of bookkeeping, a business can plan better, avoid mistakes, and keep things in order, setting itself up for success in the future. As a side note, a lot of people ask me, Noel, what's the best way I could save money on my taxes for my business? They're looking for a loophole that they haven't heard about and that only I know about. But realistically speaking, the best way for a business owner to reduce their taxes is to focus on their bookkeeping. It's not sexy, but it's smart. By having a good handle on your bookkeeping, it helps to ensure that you're not understating your deductions or overstating your income. And if you do it the other way, that can cause a whole lot of other problems too with the IRS. So believe me, bookkeeping is essential for your small business. Mistake number 5, not filing your tax returns on time. Not filing tax returns on time is like missing the bus. Once you're late, it's hard to catch up. When a business doesn't file its tax returns on time, it can lead to a lot of other problems. First, there might be expensive late filing penalties and interest, and these costs can quickly add up, even to the point where your original tax due amount doubles. Second, being late with taxes can cause stress and worry, making it harder for the owner to focus on other tasks like running the business. Finally, not filing on time can make the government take a closer look at the business, which nobody wants. By filing tax returns on time, a business avoids all these problems, keeps its finances in good shape, and can focus on growing and succeeding. It's a simple step that makes a big difference in keeping the business running smoothly and staying out of trouble. So get out your calendar and mark those filing deadlines and make a conscious effort to not be late with filing your tax returns. And there you have it, my friends, my top 5 money mistakes small businesses make and the super simple ways to avoid them. If this video was helpful, don't forget to hit the like button and subscribe for more business tips and tricks. Don't forget to check out my free ebook, 10 Tips to Simplify Your Taxes. Link is down below in the description. Also, check out these other small business tips and tricks videos that I think you'll enjoy up next. Thanks for watching and see you in the next video.